You're listening to Navid Moosa of The Mindset Movement.
Good day, good people. My name is Navid Moosa. I'm your host today and always for The Mindset Movement, the podcast. Each and every week, we do our best to bring you guys some sort of value that if you want to be better than you were yesterday, hopefully you can get it from here. That doesn't mean that you're in a bad space now. Hell, if you're happy, congratulations. That's all we want for you to just be happy. We try to have a guest on. When we have a guest on, we make sure that this guest is someone who brings value. And today's guest, Dave Lin, is someone who I definitely think brings value to not just the world of real estate or investing, but just in general overall, from someone who always wants to be better than they were yesterday. So without further ado, please welcome Dave Lin. Dave, how are you doing, man?
Good. How are you doing? I am doing well. I'm not sure if I should do an intro, but you did a great job, by the way.
Yeah.
So I own an insurance agency. I also do hot money lending, which is more inclined with the podcast. But any questions, anything I know, I'm happy to share.
Yeah, no, definitely. So Dave has the Lynnwood Forest Group Insurance Company. And then you also have, like you said, your hard money. So let's kind of talk about that. What I loved about the way you just said it is that here we don't do any fluff and big stories. We just get into it right away because we know people don't have attention span of listening to someone for an hour, right? So
that's me. So if I'm more direct, that's
no, that's perfect. That's what I said. I love it when you did it. Hey, let's just get into it. I love that. I actually,
that's all me. Okay.
Yep, that's perfect. So all right, so let's talk about your insurance company. Now, you just didn't wake up one day and say, "Hey, let me open up my insurance company." Right? You built up to that.
No, nobody ever does. If you ask 10 insurance agents, 9 of them probably tell you they were doing something and just kind of fall into it. The one that may have thought being of insurance agent is probably they got a family business in insurance, but nobody really ever want to be an insurance agent.
So what made you do it then? It was a family? Was that one of them? Or?
No.
Okay.
It was it's kind of a long story, but I can make it kind of short. So I was doing I was doing out calls at the casino. It used to be called Sands Casino.
Yep.
Now it's called Green Creek. So at the time it wasn't something that I like, and there were smokers in there. I don't smoke. So one time I was online. I was on meetup.com. It's not a dating website.
Yeah.
I'm sure most of you know meetup.com. They got a lot of real estate groups on there as well. So it's people who share interest. And then one of them was a multicultural group, which, as you can see, and yourself, we're multicultural here. So he is Bosnian or Serbian, and then he was doing financial services, which was like more life insurance. So at the time, I didn't know. I was intrigued when he said, "Do you want to be a financial advisor?" So I was picturing Wall Street, me sitting with my computer and then just, hey, trade. But it wasn't like that. But anyway, I got into it. I got life insurance, and then it wasn't really fitting my personality. So I got home and auto, which was more transactional. As you can tell already, I'm more direct. So I'm not more of a salesy person, which is more life insurance. That's really it. But with home and auto, it fits my personality better. So what I did was I did life insurance for a year, added property and casualty, which is home, auto, business insurance. And then after doing that for a year, I opened my own agency, which is officially opened back in February 1st, 2014. So we're going on 8 years and almost a month. I guess tomorrow will be a month since it'll be
March.
Yeah, March 1st. Yeah.
Yeah. Well, congratulations on doing 8 years. I know not many people can unfortunately sustain, 8 months when they open up a business and stuff like that. And so I guess, is it safe to say that you have a niche within the insurance community? Like you went from the life and that wasn't, not that it wasn't working out for you, you didn't draw to it.
It's my personality doesn't fit that trying to persuade people.
Yeah.
I'm not a persuasive person. I'm more about numbers and say, hey, so if I can say I can save you money, people will say, okay. If I tell you, hey, you got to do this for your family, you got to do this for that, you got to do this for them, then it's not really, which is true. They should get life insurance for their family.
No, but yeah.
It's hard to convince people when I'm not really a persuasive type. It just doesn't fit with my personality, my sales approach. So I'm more about the numbers, which is home and auto. If you can say that, hey, coverage the same, save you money, people will be more inclined. and I can just find out the difference in savings and coverage, rather than trying to persuade them to do something that they should be doing, but it's hard to not have them do. Not trying. I guess we should add this: trying to have them do something that they want to do, but they feel like they're not getting value because people are like, well, life insurance, I'm dead, my family gets it, why do I care? Which unfortunately isn't the correct way of thinking in my view. But
it is how people think for the most part. We instant gratification. Why us? We want for us first. Like, no, yeah, you're right.
Yeah. So I have my agency, and if there's a niche, I guess it'd be my community. So I speak Chinese.
Okay.
So what I did was I reached out to the Chinese community in the Lehigh Valley area. It's not a big population, unlike Philadelphia area, of course, but there's a good size amount for one insurance agency, I guess, that speaks Chinese. I'm not sure about the second one. I'm the only Chinese-speaking auto home insurance agent in this area. There's some life insurance agents, but I'm the only one that speaks Chinese that does home and auto and business insurance in my area. Yeah.
No, I think everybody. I'm my background's in India and stuff like that. I speak what's called language called dialect Kokachi. And in that, actually in the Lehigh County, other areas, we have people who, just they service certain community members because it's a comfort level. It just is and stuff like that. So I totally get it. And I love the fact that you recognize your strength and your weakness about, you're not a salesman, right? And I tell my agents all the time, we're not there to buy a house. We're not there to sell a house. We're there to help the problem. What's the problem? What does the client want? Just do it. And I say at the end of every episode of a podcast, that's right by the client. Yeah. That's it. Yeah. And that's what I said. I think, and that's why I said it, because I think you can resonate, or you can understand that it resonates with you and within both of us. Just go in there and just find out what the client wants. That's it. If it's maybe they don't need to sell their house, maybe they just want the roof repaired and they think it's too much, and we have a contractor who can do it for a reasonable price. Okay, but that referral business will go a long way. But I'm with you. I don't like to, you should buy this because it does this and does that. It's not me. Here's the numbers. Here's how it works. And like we were talking before we aired, we started the podcast. It was that personally, I just don't draw to that, showing houses and all that kind of stuff. Let's look, this is what it is. These are the numbers. If they work, great. If they don't, no problem. That's all, stuff like that. So, so now you still have your agency, like I said, congratulations, 8 years and growing. But now you've been doing hard money lending, in real estate. What was it? What drew you to that? What drew you to hard money and to lending it? And when did that start?
That started back in 2019.
Okay.
At the time, I like to do real estate as well, do real estate investments. But I feel like at the time, the market, what do I know now? But at the market, the value is high. Not the value, the price is high. And I was like, well, what else can I do with my money besides the stock market, which I do. I do index funds. That's my core portfolio. And then I was like, so I was searching around, researching. I was like, oh, what about hard money lending? I know other people does that as well. I did some research, and I am familiar with the market in my area. So I'm just starting out at a time, I just want to do my area because, knock on wood, things got bad. I have to close on it. I'm in the area. I know the contractors in the area as well. So worst case scenario, I have to close on it. I can, and I can still get my money back. But the reason why I did hard money lending is more to diversify my portfolio. And then that's the initial what's the word? Initial thought that I want to do. But later on, about a year afterwards, I recognize that it could be a business, because once I start doing a couple, and people will be asking me, and then I can find out that I can make a business out of this. So right now I'm doing more and more, and I got family and friends who knows what I was doing, and they say, hey, Dave, I gave you some money, would you be able to do the same for me? So that's why it started to be almost like business now. So I'm spending more time on it as well, trying to see if I can actually develop it a bit further. Just still keep it in the family fence. So I don't want to get in trouble with the SEC or something.
Yeah. Well, okay. So that was my next question: is do you see yourself going deeper into that route of more lending and maybe
Yes.
essentially? So, what would happen with the insurance company at that point in time? You think you'll keep up with it? Maybe get someone to run it for you?
It's passive. When I say passive, the home money lending is kind of passive. Instead of buying real estate, getting rent, and you still have to deal with the headache of the tenant saying, "Hey, my toilet got clogged." With home money lending, you don't. You are letting out the money. You're still getting a monthly rent, in this case, monthly interest, but you don't have to deal with the tenant problems. Of course, you don't get any appreciation, but that it can be hit or miss either. So it's not like once you buy a house, there will be appreciation. Obviously, the past couple of years has been kind of out of the norm.
Yeah.
But for me, if I can get a good return on the interest rate, so for my typical charges, I can send you the link later, but I charge anywhere from 11 to 12, 13% for the annualized interest. But most of the money or some of the money also come from the fees, the upfront points I charge as well. So sometimes I would charge 2, 3, 4%, and then there's the application fee. So if you were to add all the fees, all the points, and you do a 6-month loan, and then if you do it 6 months and they will pay off earlier, sometimes the average anywhere from 14 to 16% annualized return. So that makes even much better than the stock market. And so right now I'm doing a bit more of that and less of the index funds. And with other people who want to ask me if I can do it for them as well, I will lend out their money, pay them a slight interest, and I just pocket the difference.
Yeah. Absolutely. Why not? You know, I mean,
but there are friends and family who reach out to me. Okay, so any financial SEC people watching this, nothing.
Yes, this is not financial advice. This is not financial advice at all. This is just two guys having a discussion that's getting recorded. That's it. That's all this is.
Exactly.
Yeah. No. So I mean, you said something when you were talking about the hard money, the lending aspect of it, because most people think about real estate and right off the back, it's flipping, becoming a landlord. Those are two, investors want to get their real estate license so they can have access to the MLS because they think the MLS is like this godlike data, all that kind of stuff there, right? When in reality, MLS just pulls data from, other sources, other websites too. So it's not that big of a deal. But why not? Now you talked about, not being a landlord because, toilets clogged, Christmas phone calls.
I still have a few rentals, but
okay. So that was my question. You have nothing at all? Or do you still have a few?
I still have a few. I sold a few.
Okay.
Just because the insurance side is a little bit more active. Because it is a business. I'm running it. I have some employees, of course, but I just don't want to deal with tenant issues because if a tenant calls me today at nighttime, I'm the kind of person that want to make it right. So I'll be stressing. Oh my God, it's nighttime. How am I gonna get somebody in there? So I'm not one of the person who the landlord, if they were to call and say, no, it's the weekend. Tomorrow I'll do it. It's the weekend or Monday I'll do it. So for me, I'm the type where if I see a problem, I'll try to fix it, and I want to fix it immediately. Otherwise, I'll stick in my head, and then it's gonna be in my head for the next.
Just consume you. I respect that, and I agree with that because I think I was telling you before, I had a rental and stuff like that, and I've had places, and I gave up on it initially because I was like, for that reason, I was getting phone calls at 3 o'clock, 2 o'clock. Hey, this is not happening. So and so, is having this happened to the tenant next door, whatever, and it was very stressful. And I'm like, this sucks. Who would want to do this, right? But then I kind of just said, okay, me personally, and I'm going to kind of tell you this as well, and whoever's listening, is that having a property manager who understands your vision is very, very key. And I went through a lot. Of property managers. I finally have one, God bless, who handles all my stuff here locally. I want them to go to other counties and go further out because they're so good, but they won't because they understand and they know, listen, this is what makes us so good. We're so good in this small because we're close to the properties, we can do it. So I would just strongly encourage you, anyone listening, is that if that is the case, start looking at some strong, not that you haven't, start looking at some really, really strong property managers, local guys, local girls
Yeah,
in
those are
the
hard to
areas.
find.
They are, you're absolutely, absolutely hard to find, no doubt about it. As I said, I've been
I
through
never
so
had
many.
one. I just use myself, and I recognize that if I'm doing it by myself, it's just going to cause me a lot of stress that I would not
No,
need
no,
to
yeah,
love
that's
it.
fine.
Yeah.
So rentals, obviously, you talked about that. What about being someone who flips houses? Why wasn't that attractive to you?
The amount of time involved as well. So if you're flipping houses, you still got to oversee the
Yeah,
contractors. You still got to go visit the site, make sure things are on schedule. So time involvement as well. So right now for myself, I'm more interested in more passive opportunities. Um, so if somebody got a business opportunity where I need to just be a silent investor, or even a capital investor, but I can help with some, let's say, marketing, something that doesn't take out too much time, I'll be interested. But anything we have to involve day to day wouldn't be something for my retirement plan. My retirement plan
yeah,
is to eventually not be involved and then just live off dividends, live off stocks, wherever it may be, just be all truly passive. And hard money lending is more in line with that. Otherwise, I wouldn't I wouldn't be doing that. I'd be doing more flipping as well. But even now though, if you want flipping jobs, flipping deals is tough with the market too. So
yeah. It is. No, personally, I don't like flipping because it's a job. That's the
right,
reason why. I've done it. Don't get me wrong, but like millions of other people, it was kind of like, hey, let me just flip a house. There's a lot of money. Then you do. You're like, this is a job.
right,
This is just a job. I tell people, hard money lenders, private money lenders, it's almost like being the producer of a movie. You're in the background. You're kind of calling all the shots and saying you're putting all the fingers. You're not lifting your finger to do the work. You're simply writing the check up. Say, okay, well, I'm done. My contract says this. Here's what I get. I don't care what happens to the property,
mm,
but here's what I need to get and stuff like that. Now, having said that, of course, let's talk about the due diligence side. Let's talk about the due diligence that, because a lot of people think, oh, number one, you have to have a shitload of cash to become a hard money lender. Well, part of that is true, no doubt about it. I mean, you've got $50, you're not going to become a hard money lender. Let's be honest here,
right.
right? But how did you get started? Like, did you say, well, I have a 401k. I was good with my savings. I took I invested in stocks and I rolled it over. So talk about how you got started into that, your transition, if you will. And then talk about your due diligence side. Like, here's what I look at before I
Okay.
loan on the deal.
So on due diligence side, I'm pretty decent with numbers, and I know my market. So when I first got started to be conservative, after researching how to be a hard money lender, of course, I decided, hey, what my parameters are, and then my parameters are I don't loan more than 70% of the after repair value.
Okay.
I don't try to go to areas that I'm not familiar with. So starting off, I only did Lehigh Valley, Allentown, Bethlehem, Eastern General area, surrounding areas. Now I do also Poconos and the Harrisburg area. But because I want to be conservative, any business, you always want to start small, and then once you get the hang of it, go bigger and bigger. So with the Lehigh Valley market, I'm familiar with it. So somebody were to say, hey, Dave, I got this house I'm looking at, I can purchase it for so and so money, I can rent it for so and so, I can make so and so. So if I know the market, I am more confident the number will work. So that's one of the big due diligence I think everybody should be doing when they first got started. Is not to go nationwide, or not even go out of your
Yeah.
state or your area, but to stay
Yeah.
local, in a local that you know, a local market that you know. And fortunately enough, in my market in the High Valley, it's been a hot real estate market. So we got our state investors, we got local investors. So when I first got started, I didn't even do too much advertising. I didn't do. I only do like social media posts. And when I do my insurance business, I go to networking events for real estate investors as well. So at the same time while I was doing that, I would pitch myself, hey, I also do hot money lending. So it serves both purpose
Gotcha.
when I go in there to network. So so due diligence, making sure stay local for myself anyway. And then the numbers, if you are a current real estate investor, then you know your numbers already, and you know if that number makes sense that the other person proposed to you. If not, then you should ask around, ask a real estate investor, hey, does this number work? Have a good realtor like yourself who can also give them comps. I always ask for comps as well from their agent, whoever they may want to use. But if I think that the comp may be not as detailed, I will ask one of my real estate agents I work with, say, hey, can you take a look at that as well? So having a good network of people is very important. And on the back end, having some contractors that you may know if the deal falls sour because the borrower couldn't perform because they got sick or they got cold feet or the contractor took the money and left. And you can have people that you know who can help out on the contracting side. Because for myself, I'm always about a win-win-win for everybody. A win for the seller of that distressed property that they don't want to deal with. Maybe they're out of state. It was estate property. A win for the borrower, so that way they make money. I don't want to be the foreclosure guy. I want to be the home money lending guy.
Yeah, absolutely. Absolutely. What about during the process? So once you've done due diligence, you got your comps, in the project, now you've loaned the money out.
Yeah.
It's been deployed. And, let's say it's a 6-month term, right? That you're hypothetically speaking, 6-month term. In that 6-month time frame, what are you doing then? Are you visiting the property? Are you getting updates? What's going on?
So I ask for photos. I will ask them, hey, after a month, tell me what's going on. And then ask if you're doing renovation already, send me some photos. That's pretty much it. I don't really need to see the site per se, since if you give me some photos, I can see that interior, exterior, and see that work is being done. So if I go visit the site personally, I have to charge them a inspection fee. But for myself, currently, everybody I work with has been pretty good. I haven't got anybody that defaults yet. Knock on wood.
Good, yeah. I mean, but it happens, right? I mean, God forbid, luckily, it hasn't happened to you and stuff like that. But like, it's the reality of it now. So let's play the what if scenario, right?
Mm-hmm.
You loan me money, and I'm doing a project, and again, 20 years in the game. Right. Multiple years in the game for yourself. We're both smart guys. We look at everything and everything looks good. And then all of a sudden, something drops right now. I know the worst thing personally I could do is avoid you. Worst thing I could do is not communicate with you, right?
Right. Because I can bring my resource to help out.
Yeah. So and I really want you to talk about that, because and this is really for your unseasoned investors, for those who are thinking about getting into this business, or those who are like at the close. I think a lot of times, because a hiccup happens, it's going to happen usually on a Thursday or Friday. It always happens on the right there. And the default mindset is, well, I don't want to ruin my lender's weekend, so let me not tell them until Monday or Tuesday. Can you please tell people how the worst thing you could ever do is delay communication when something goes the other direction?
I haven't had this happen, but for me personally, if something does happen, let me know so we're a team here. I'm not the
thank you.
I'm not the opposite team player. We're on the same team. So the more we know, the more I know, the more we can figure out what's going on, and we can figure out what we need to do in order to get it to the goal line, to get that touchdown, rather than fumble all the way. I'm not a football person. Am I using that now?
No, but that's perfect. No, that's fine. And I really want you to say that, because, so full disclosure, Dave and I have not done any business together, right? I've seen him on social media. I've seen the stuff that he does. He posts, hey, got this deal here and stuff like that. And we have a lot of mutual friends in common.
Yeah.
Between Berkeley, Montgomery County, stuff like that. So, and the reason why I wanted you on here is because there's a difference between hard money lenders and private money lenders. Hard money lenders, what are the numbers? Here's what it looks like. Here's my money. I better get it back at this rate. That's it. Private money lenders are due diligence as well. Here's my money. I better get it back. But at the same time, there's more personal touch. Maybe their pockets aren't as deep or something like that. What I like about you, what I've heard about you, what I've seen about you, is you kind of have a good balance of both, right? And I think a lot of people think, well, I know if I go to a big name bank in general And if I have a hard issue, they're not going to care about my issue. They want their money. And so, and when they think of hard money, sometimes they think that. And there are hard monies to do that. And I'm not knocking anyone. If that's who you are, hey, that's fine. I don't pay your bills. I don't sleep in your bed. As long as you can sleep and pay your bills, if that's what it takes, that's on you. What I like about what you're approaching, and you just solidified it by saying that, is that we're a team, right? The only way you're really going to get your money back is if this property sells or refinances or whatever the exit strategy is. Right. So instead of just saying, tough shit, go deal with it, I got to get paid on this date. It's, okay, what happened? All right, let's not dwell on it, but how do we get past it so we can get this thing, like you said, to pass the goal line so we can actually make this touchdown instead of just fumbling it all the way through. Mm-hmm. And I think it's important because my experience, just through other people in general with hard monies, is that very cold cutoff line. And there are very few hard money people that I know that have a personal touch, have a little bit of empathy with the individual, because you understand, look, shit goes wrong. It happens. Mm-hmm. Like you said, what we've seen in this past year and a half, I think it's an average of like 30% increase for the average Pennsylvania home in value. That's unheard of. It's not common, right? You're not going to see a 30% increase.
Yeah.
Right?
I thought 2019 was high, and then 2020.
And then 2020 hit. You're like, holy crap. Exactly.
Going up.
Yeah. So I think people need to hear it from you because you are a lender, right? Because you're someone who can say, hey, listen, I tried this, I looked at this, didn't like it, and I went with this route, but I'm here with you. And I think if more private lenders, hard money lenders took that stance, I think the negative connotation around hard money wouldn't be at there that it is. And that's just my experience that I've had in talking to other people. They're like, yeah, I don't like hard money. I'd rather just deal with the bank or go private money route and stuff like that. But I'm like, I hear you, but I don't think not everyone's equal, right? So not all hard money lenders are the equal, right? I mean, you gave your numbers roughly.
For me, it's about relationships. So if the number works,
absolutely,
it's a good deal, I will go forward with it. And yes, there's a higher interest, but at the same time, if you can make this deal, it's 20%, 30% of a pie is much better than 100% of a no pie.
Yeah, yeah, you're right. You're absolutely right. It's just, I think people like you give opportunity to those who cannot just walk into a bank, who don't have, 5 years of tax returns, 3 years of tax returns, but saying, listen, I've got this here. I've done so much homework. I have so much experience. I just need someone to help give me a shot. And having said that, like you said, you see interest rates a little bit higher, but what's the saying? You got to pay to play. Right. And that's just what it is. And, people are just like, well, that's ridiculous. Interest rates so high. Well, you can't. Okay. You want that 6.54%? Well, then go back and get your credit at 750 plus. Go in and get established, get 2 years of tax returns and make no blame. Like, you got to have this perfect record to do all that.
And sometimes we find a deal immediately. You don't have the cash. Even you may have good credit. You may have everything that a bank wants, but the time,
the speed of cutting that. That's right.
Yeah.
All right. So we talked about your due diligence. We talked about what makes you different than just a traditional home loan lender. How did you get into it? Because I saw in your profile, you were in the Navy. Thank you for your service. You were at Sands Casino, like you said. Mm-hmm. And now you have insurance.
It wasn't about a casino business. They don't pay you that well as a
as you think on TV shows or movies, right? It's not like Ocean's 11. So what made you get into that? I apologize. Let's switch that. How did you get into the business of hard money? Like, where did the money come from? Like, how did you have the vision for that?
So it's from mainly my insurance business.
Okay.
It's been successful. So I started my agency back in 2014, and then I started hard money lending in late 2019. So about going on 5.5, almost 6 years. So during the 6 years process, I was able to be successful in the insurance.
Was that your goal though? Was that goal? Hey, listen, I'm gonna do insurance first, and then after this, I'm gonna eventually get to that, or it was during that process?
It was just me like being to do real estate in general.
Okay.
And then decided think that I feel that the market, the pricing for the real estate market is kind of high, and then just kind of pivot because like 2013, 2014, around that time, you can find plenty of deals on the MLS. But after 2018, 19, going on forward, it's harder to harder. And I just feel like, well, I don't have the time to go on the MLS every day to search for it. I don't, even if I do, I feel like the pricing is kind of high because at that time, the Allentown, Bethlehem area is more about a cash flow play.
Yeah.
There's not much appreciation during that time frame. The appreciation pretty much came from after, I think, COVID. Right now, that's where pretty much all the appreciation in the Allentown, Bethlehem area is coming from. I'm not talking about the suburbs. I'm talking about like the downtown areas. It hasn't generally historically been a cash flow play where you buy it for cheap, I guess you can say, and then you rent it out, and then it's a cash flow. There's not much appreciation to speak of. Like one of my property I bought in Bethlehem was like for $28,000, something like that. Now it's probably worth about 80, 90. And that's just off the top of my head. I'm not even sure. But that's after the COVID happened. If it didn't, I'm thinking it's probably maybe 40, 50 at a time frame, which isn't that much appreciation over 3-4 years. But anyway, back to where I got my funds. My insurance business has been successful. So we get paid by commission. So every month there's commission coming in and this money coming in. I was like, what am I gonna do with this money? I have it in stock market in my index funds, and then I still like to do real estate. It's always been my first love, so I still like to do real estate. So after doing some research, and then I said, well, why not just lend out the money for people who can find these deals where I can't find by myself because I'm not really day-to-day real estate person, real estate agent, real estate investor. So I got into hard money lending, and then and that's where the source of funds coming from. But once I got started, I was like, hey, this is pretty good. Where can I find more money? I'll tell you what my secret. So I do index funds. I'm not sure if you guys are familiar with the stock market, but index funds, I buy the total market, US stock or international stocks. So what I got started after the first year of doing hard money lending, I got more demand than I have funds available. So I was like, where else can I find money? So there's a couple of sources. One of them was my stock market, my brokerage, not the tax defer, not the IRAs, because
not the subtract IRAs.
Gotcha. Not the 401ks. Those you can't really touch. You can borrow it to buy a house, but you can't really borrow it to go invest in something. But on the regular taxable accounts, just like a house, you can leverage it using the bank's money. In this case, you can kind of do the same. You can leverage it using the stock brokerage money by taking out the money and then paying in the margin on it. For example, depending on the company, on the stock company, you should edit this. Depending on the companies you have your stocks with, they will charge anywhere from 1, 2, 3, up to 7, 8, 9%. So I found a company online where they only charge you anywhere from 1 to 2.5% for like ending up, the more you loan the less the interest rate, but average is about 1.5%. So you're using the money that the bank let me go back. So let's say I have 500,000 in my regular taxable account, and then I take out 200,000. So you're getting or you're paying 1.5% on it. But on
the 200,000.
On 200,000.
Okay.
Because you're paying margin on it.
Yep.
So what happened was when you take the money, they charge you the margin rate, and you can use that 200,000 and you lend it out. And then after 3 months, you pay it back. After 4 months, pay it back. So you're paying, let's say 1.5 to 2%. But you're
charging out at 8, 9, 10, whatever the number is. So you're getting that spread.
There's points. So that's where some of the money is coming from as well. There's other people's money too, where once my family and friends know what I'm doing, say, Dave, can you do the same for me? I'm just sitting, I got some money in my savings account that's not really paying me anything. I was like, okay, I'll pay you so percentage, and then I will lend out, and then we'll split the
correct. Yeah.
We'll split the profit too.
It's exactly what I do. I get a lot of family hits me up saying, "Hey, I got this. I see what you're doing. Yeah, sure, I can do it. It's going to come.
Yeah.
Here's the fees. Here's the structure, stuff like that." So no, I understand it. I just wanted people to hear about it because a lot of people think, where I get this money, I don't have this money. It's like, well, okay, yeah, money doesn't grow on trees. We get that. We understand that. But like Dave said, he started his insurance company. It's still a job, right? Both of us, hopefully, if you listen to this, you're someone who has a job. You just got to make those decisions about being more smarter with your money and then have this future, right? So again, like he said, he didn't say, well, I'm going to be an insurance person one day, I'm going to be a lender one day. He just said, hey, someone approached him about being a financial advisor and he tried it, didn't like it, not that one aspect. So he parlayed into something else that he did like. And then you said, hey, I like real estate. It's always been your first love. So, and it took you like years, like talking close to a decade, at this time almost, 8 years in your business. 2014 you started, and 2019 you started lending. So, we're 8 years in, and
yeah, 8 years for the
for the insurance company, right?
And about
5 years, 6 years for the so half of it. So
you still need some money.
You still need money. Exactly. Yeah. You still need the money to start that business.
Yeah.
So what I always tell people is, look, if you just find a deal, and you said you have more deals than actually funds available to you, more opportunities rather than funds available to you. And a lot of people don't, and I was one of them when I first started, 15, 20 years ago, where people said, look, don't worry about the money. And it's hard to say that. It's hard to people to grasp that because like, well, how can I not worry about the money? Because I need money to do the deal. If the deal is that good, if the deal is that solid, people are going to throw you money. I say, here, take my money, right? That's how I raise private monies. I don't sell them. I just say, listen, I have an opportunity here. Do you want to get in on it? And they're like, oh yeah, definitely. And then it's a referral-based business. So, I wanted people to hear your story on how you got into it, because a lot of people think, hey, you got to have a shitload of money to begin with. Depending on what aspect of the business, if you want to get into hard money lending, yeah, you do need a sizable amount of cash. But that doesn't mean you can't borrow from a hard money lender and start saving instead of you flipping a house and getting your profits.
I want to talk about like sizable. When I sizable, for me, I guess it's more subjective. So for some people, even 30, 50,000 maybe sizable. But you can do a hard money loan for 30, 50,000.
Yeah.
So let's say somebody who has some money, maybe got some savings, and they got a taxable account they have with their mortgage. They could just get a margin loan, just take out some money and then just pay the margin on it. Now, find a company that will charge you the less interest, less margin rates. For me, that's through Interactive Brokers. They actually only charge 1 point. If you're on the regular account, anywhere from 2.5%, 2%. But if you're on a professional or the pro account, where you pay transaction fees for if you're buying nice EFTs or index funds, then they only charge you anywhere from 1 to 2%. But the good thing about that is if you're netting out at 10%, you're charging 2 points and you're charging fees. You're making 13% on a hard money loan in 6 months. And then you're only paying maximum 2-3%. You're making a 10% difference there. So imagine if you keep on doing that, and then once the money grows, then you do more and more funding.
Yeah. No, that's a good point. It is subjective to dollar figures and stuff like that, because you can get into the smaller deals, like usually in the rural, in the urban properties and stuff like that. You can get into those smaller deals and stuff like that. Yeah, it's a high risk, high reward thing. So just understand that. And like you said, yes, you're making money on the interest that you're charging, number one. And then there's upfront points, and then there's like doc fees and stuff like that. So there's little ancillary fees you can kind of make. And as long as you're smart with that money, not smart, and I don't mean smart as in necessarily investing it in the right stocks and stuff like that, but just smart, because a lot of people, they get this money and then they don't know what to do with it, right? And then they go buy something that's just becomes a liability instead of an asset. So unfortunately, then they got to start over again.
Right.
So there is some sense of responsibility, and you have to take responsibility for your own active spending habits and stuff. But to Dave's point, if you have 30, if you got 50, you still have opportunity to get in. Maybe 2-3 people who have 30. Then you guys put your money together. Now you guys have 90.
Right.
Okay. you got to get creative if you want to get into it, or just start off small and slowly, have that end game in mind that here's what I want to get to at some point. So, but no, Matt, I really appreciate you taking the time with talking about everything you talked about. I think you're probably one of the few lenders who gave out the ideas of of the margin cut, in your stock brokerage accounts and using margins and stuff like that. No one's ever talked about that, so I thank you for that, because a lot of people don't want.
One thing I do want to mention is, if you do take out margin, make sure you don't get margin call. So
yeah. Well, like this is not financial advice, so we can't protect we'll do our best to help you guys out. But like he said, and if you're not sure what that means, you got Google, right? Yeah, Google what margin is, what margin calls are, stuff like that.
This is two guys just talking about
exactly. We're not trying to tell you guys how to do your stuff or whatever. This is just, look, we're having a good time. We're talking about how we can, do
and how I do it,
right, and go and how he does it. It's one of many ways, So if this resonates with you, if you can relate, Dave, follow Dave on social media, check him out. He's on Facebook. He's got his website. Feel free to contact him and stuff like that, wherever he can help out, he can. Dave, thanks again for your time. Really appreciate it, man. Guys, check Dave out. He's on social media. And again, it's Lynnwood Forest Group, Insurance Group. Check him out there. He's also a hard money lender as well. Look, each and every week, like I said, we try to bring a guest in, and I think we knocked out the park again today. Thank you, Dave, for making this a success. And each and every week, I tell you guys the same thing. Just take care of the client. Legit. If you take care of the client, everything else will fall into place. And sometimes the client is you. Sometimes you're the client. Sometimes you got to take care of yourself, because you're the best version of yourself. That's when you can be the best version for everybody else. So you can, just give that energy forward. Take care of yourself. Be good to each other. Be good to yourself. And we'll see you guys next week.